Alrighty, well, welcome everybody. It is Friday, February 21st of 2025. I think there was a good lesson in yesterday's kind of morning market to talk about trading a fast-moving market and how we scalp in an environment where the market is moving very aggressively one way or the other. So let's jump back to the open yesterday because it basically started transpiring about 30 minutes after the market opened here. I guess first thing I should mention is that when we came into the open yesterday, there were two main levels we wanted to see the bulls defend if the market was going to continue to pull back into the open. And those two areas were 61.05 half right here, and then right down here by the 50% of last week level, basically 60.80, give or take a point or two. So we had 61.05 half and 60.80 as the two levels that made the most sense for the bulls to defend. And sure enough, yesterday they opened, they sold off, and they came right to 05 half here and got the bounce into the end of the day. So exactly what I warned you about ended up transpiring here. Remember, what we wanted to see for the bearish bias yesterday, or to have more faith in a pullback, was for the bears to hold price below 50% of the day before. And when we opened, let's zoom this in a little bit. I know for most of you it's probably very, very tiny on your screen here, but the vertical line is where the market opened. And then you can see here 50% of the day before sitting there right at 48. And I told you guys that if the bulls could get through there and get through this very level right here, the swing high from the overnight, but more importantly, the close of the day before. If the bulls could push price through 50% of the day before there, which was VWAP as well, and get up through 61.55, that was our clue to start targeting up to new highs, or at least up into the next roadmap level, because you never know where that market could get a rejection, especially because we know we have edge at those areas. But that was the general idea. On the other side of things, we talked about wanting to see the bears hold price down below 50% of the previous day, and then obviously ideally get down through the overnight lows. And so that was kind of the general idea here in terms of what we wanted to see the bulls or the bears do in relation to some of our key levels. So what happened out of the open? Well, for the first half hour, if you were in the trade room yesterday, remember I told you guys, this is way too slow and choppy for me. I think I'm going to walk away. Because it kind of opened like the last couple of mornings where it didn't do anything. We just watched the paint dry here for a while, and it just kind of chopped a little bit here and there. It took, I think, what it was, the first first 15 minutes of the market was just like, okay, somebody shoot me here. This is just a total waste of time. But then we started to get the first showing of face as the bears pulled price. Notice what happened. They held right around the VWAP. This is kind of like the moment of truth. It's like right in the middle of everything, right? We've got 50% of the day before, a good level for a bullish or bearish bias. We've got the VWAP. Typically, if it's a strong market, we're trading above it. And typically when we get below it, it becomes a bearish market, right? From a very general sense. We were also right near the 200 moving average. And so, that was the moment of truth. Who was going to win out around this area? And then you can see the market opens and pulls down. And then we hold the back end of the fast moving average. And there's even a beautiful bearish divergence on that second test right here. So there were, if you were going to do the most aggressive thing yesterday, it would have been to sell the back end of 46 or again 47 here, the fast moving average. That was the most aggressive thing you could have done. And not saying that that's something I'm hinting at here, but that was kind of the first opportunity. Shorting basically the back end of the FMA. You took on maybe a point of risk max, and that would have been it. You would have captured the high today. The problem is we were still trading in a very low volume environment, and we were still inside of all the chop, and we were right there near everything. So I would have never put any risk on right there. This is an aggressive trade setup to begin with, and we're also right in the middle of riddle of nowhere. So I did not trade, and then I think I walked away for however long, and I got back to the charts, and things were just getting super aggressive to the downside, and it became very apparent there. Again, right about 15 minutes after the open, it just started to pick up, and then we just started to see this strength to the downside. So this began this very heavy sell-off, which I'm arguing is an aggressive trading environment, an aggressive push in one direction. So what I want to kind of share with you is how you would trade this type of market environment as things are as volume's picking up and we're starting to trend and hold below all of our key levels that we want to hold below for a certain bearish perspective. How you could get in on this, again, with very limited risk and potentially capture a good portion of the move. So again, at the beginning, there was no real super clear indication who was going to win out here. But then we broke the low of the overnight session around 61.41, and we got through the first expected support. So once this happened, once we got down through this first level, your first opportunity was right there. When we came back up into the back end of the fast moving average and the roadmap level at 37.75 or 38, if you will. So that was really the best first opportunity. And why is that? It's not just because it's a level. We do know that we could probably blindly buy and sell our roadmap levels and basically make a whole lot of money. But the point here is that we had a level. We had a second level, the FMA, which is our aggressive trading level. If you zoom out and look at how the market reacted the whole way down, there's a reason I use this on my charts every single day. There's a reason this moving average is on here, because in a fast moving market, this becomes your best friend. And you can see the whole way down, there wasn't a single test of the FMA from the beginning, even from the right out of the open when we held the back end on the first test, all the way down to the low of the day. We held it every single time. And then right here, when we start to change phase, they break out through. Okay? And notice they start to reverse phase here and start to come back up right at the next roadmap level. And that is that 05 half level we talked about when we started the broadcast here. Right? So that was the major low of the day. Now, it didn't just balance out and push to new highs. They did come back and test 05 half 2, 3, 4, 5 times. And then the final test kissed it to the tick, and then that began the push to the high of the afternoon. So on the way down here, in a heavy market, and it can be a heavy market down, or it could be a really strong market in a directional, almost a unidirectional push higher, it's going to then respect the fast moving average to the upside. So you'll see this type of play, which basically starts to show its face right here. When we pull back and then start to push to new highs, notice every pullback here comes right into the FMA, and then once we get to that high, we get the retracement, and notice it's a reversion back to that 200, the reversion to the mean, where, by the way, that was the previous resistance in the market where we got the bounce there. So anyway, I'm kind of digressing and moving away from what I want to talk about. So I want to mention, and I kind of went off the rails here with this 61.38 area. So I want to make my case for why this would have been one of the best trades you could have took yesterday. So again, we have a lot of strength to the downside. We actually had, if you guys read the news report yesterday, a lot of bearish clues from the high of the day before. And we talked about wanting to see either the bears getting down through the overnight lows and through 38, or we wanted to see the bulls get up through 55, and then we would potentially forget about the bearish scenario. But the bears followed through right out of the open. And again, the first thing that happened here was we got through the first expected support and then came up to test the back end of the fast moving average and arguably the actual roadmap level. Now, the third piece of the puzzle here, the first two being the test of the roadmap levels, is the fact that that high right there gave us a huge bearish divergence right? So if you're watching this, and even if you're watching it as it's pushing into the roadmap level right here, this would have been my sign. And like I said, I wasn't at the charts. You'll see where I entered here in just a couple minutes when I got back to the charts. But look at this major divergence as we're pushing right to the FMA, the actual moving average right there, coming into alignment with the roadmap level. Big bearish divergence, okay? Well, I would have put my trade on right there, given the fact that we had a really aggressive sell-off. We had gotten appreciably through this level. It wasn't just a 2-point peak and a bounce. We did actually come down 3-4 points through it, and maybe just 3 points, 3.5 points, and then we were coming back up into it, okay? I would have put my trade on because there's a big divergence, and I would be targeting, again, for my 2-point, in case this is just a little parry that does go about 2 points and then come back. I always try to take this off, and I've been doing it now for a couple, maybe the last, I don't know, 2 months or something, where I'm just grabbing my first scalp off, and then I'm starting to target the bigger targets, 5, 10, and then ideally, if I have a larger position on, I'm targeting all the way to the next expected support, which is the next roadmap area. So I probably, if I had, if I had a much larger position on it, would then even try to target even further. But you guys know I don't trade too big, and so that's the idea. You get in here. How much risk if you actually took the very level, which is really the best way to trade this strategy, is you take the levels to the tick, because typically they don't break by 2 points, and a lot of times they push right into these levels within a tick, and then that's it. They just go, and we see plenty of examples of that over and over again. They come into a level, and then they just launch right off of it, right? So get rid of this. So that right there, you've got your bearish divergence off the high. You've got the FMA trending lower. You've got the roadmap level. That was, in my opinion, probably the best thing you could have done yesterday. Now, if you missed out on shorting, you got a bunch of other opportunities. And so when I got back to the charts, it was just pushing right down into previous daily low and actually kind of squeezing through it. And I was like, oh yeah, baby, let's get in on this. And I got short right off this second high. So if you notice, the market pushed into the roadmap level by a tick or two, pulled back, and then on the second push right here, we got a slightly lower high, right, by 1 tick or 2 ticks there. But where was my RVI? Aha. So I was looking at that, and I took my short, quite literally from 28, and it filled, and then from there, it came back, but luckily I left my stop up here above the swing and got a really good trade. So that was probably the second best thing you could have done yesterday, was to get short here, or again, waiting for it to actually come into the FMA. You would have had to wait a little bit and then maybe take it here. But notice what happened, and actually maybe that is not necessarily there it is right there. I knew it was there. Notice what happened here when they tested into the level again. And I kind of mentioned this the other day. I'm trying to teach you guys how I'm actually thinking as this stuff is happening real time. And so when I was short from here, and it came back to this area, I did notice that we got another double top and there was a big divergence here. So when I saw that happen, I know it was coming back. I was a little bit, unsure, was I going to get stopped out? When I saw that and we've dropped again, that gave me a lot of confidence that I could kind of like take a breath, right, and see, and it very well looked like it was going to roll back over. And sure enough, that's what we got. And then right here was your next aggressive trade opportunity. So I'm trying to teach you guys how to trade aggressively when the market starts to become very heavy or very strong in the bullish direction, right? So there was 2 or 3 opportunities here from the roadmap level. You had another opportunity up here from the roadmap level, right? And then you get the parry right off the FMA with another bearish divergence. So if you're watching this in real time, my friends, and you notice we're coming right back up into the FMA, What is the FMA this time? Basically the previous swing right there. And you can see that there's this big divergence going on as we're pushing right up into the FMA. Look at that. Big divergence, even from the first swing here on the FMA, or on the RBI. And we're testing the FMA in a strong downward moving market. If you got short from there, again, assuming you got filled, that is the one crappy part about our trading strategies. We're so accurate that a lot of times if you put your trade at the swing high, it doesn't even get filled. And you quite literally nail the swing high, but don't get filled. So if you got filled from there, it never came back until much later. So these are some picture-perfect examples of aggressive trade setups off the fast-moving average in the back end of key roadmap levels in a heavy market. And you'll see this stuff happen week in, week out. Again, on the bearish side, and then really strong pushes on the bullish side. You'll see them ride up and on top of the roadmap levels. Okay. So again, we came down, and then this was my final trade here. And you know something? I don't know what could be better than this setup right here. You know, like if I was to say the best trade of the day was probably trying to get in super quick, but remember there was risk here. It was a little bit more risky. This was a much more high probability trade because we had pushed way far away from that 200. We were coming back and the 200 came into alignment with the roadmap level. So we had both levels lining up perfectly. This was a very nice textbook retracement back into the mean for the morning. And what did we get up off these highs? A beautiful bearish divergence on both tests. And I actually got in twice. I think what happened was I got in, I took a scalp. It came back, I closed it. But when I recognized this second peak high here, notice what happened. We peaked right up. Oops, clicked the wrong button there. Peaked right up into this slightly higher high again. Not much more than 3 ticks through the 200. And there was this divergence up off the high. You can see, again, in real time, if you're watching this, peaking up into the 200 here, it's now got to a higher high, but where's RVI? Way down here, right? So I didn't get filled perfectly. I had to enter just as it was pulling back, and I got in at 18.5 or 75 there and was able to get a pretty good trade. And then I got in short right here. Again, this is an aggressive trade setup where I'm looking at the back end of the FMA, expecting the market to continue to sell off in the direction of the overarching push of the morning and getting my divergence off the back end of the FMA. And this is, again, another aggressive trade, but I knew I was wrong like right there because I didn't want it to go through the swing high of this pattern. If it goes through the swing high of this pattern, I don't have a divergence anymore. So I know I'm wrong basically within a couple ticks of that high, technically the swing high itself. So I got in, I knew my risk was smaller than typical, and I got a little scalp out of it and it came back, right? So that's how my morning went. These are all my real trades. I'm not cherry picking. I'm not trying to hide any losers from you. I mean, this is just quite literally how it happens sometimes. And so from there, you can see you could technically say this is a loser, but I did grab my 2 points out of it. It did go about 3 points in my favor there and then came back. And then I was done. I was like, that was fine. And for all we know now, it's going to just play around in here. And sure enough, it did for a while. But notice what happened in here. Again, the major rotations of the morning off the major roadmap level. That's the low I warned you about, 05.5 for the bullish bias. The back end of the roadmap level here, 61.18. And then they push all the way up and they come to the tick off the back end to 28 again. Right? So again, these major rotations still happening right off the roadmap levels. And then again, you can see for many hours they kept holding 05.5. And then at the end of the day, we got the breakout back higher. And notice what happened here on the push higher. As they came up, first of all, they were parrying back and forth inside of this right here, right? Up and down and up and down and hold the back end again. And then as we start to get the push to the high of the afternoon, we actually hold the 200 the whole way up. So again, if you were looking for a long, once we push to the new high over here, again, trying a long off the 200 here, got a parry of 2 points, but then it came back. You know, trying a long over here, went through, but then the back end hold. So it doesn't work every time. But I'm just showing you that when this level works, this is what you're typically getting. You're getting a hold within a point, point and a half, and then it's going. So you got a whole bunch of long opportunities here as it looked like maybe we were going to get that rotation. Again, this is the level we expected the bulls to hold. So support, 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 and then we start to push above the VWAP. That is somewhat of a clue that this is the beginning of the rotation and the bounce off the major support area. Again, not surprising why they bounced from there. We already told you before the market opened that was probably one of the best places for that to happen. So on the way up here, let's just take a look at some of these 200 plays. Right, this is a less aggressive trade setup. We looked at the main lesson today was looking at getting in on aggressive trade setups when the market is strong in a very specific direction. So now we obviously strong in this direction, but not a straight line, right? So what happens on the pullbacks, you get these picture perfect retracements right to the 200. And on the lows, a triple bottom with a divergence on every test. Okay, so if you're watching this in real time, you're noting us break out back above VWAP here, and you see we're pulling back to the 200, and you recognize there's one. Maybe you don't get long when it comes into it the first time, which there was divergence. But on that second one, now that looks even better. There's a divergence, and then, oh, the third one, you even get that nice hammer candle right off of it. And then we bounce out, break the high, and get our breakout above the FMA for the continuation. So there's a beautiful opportunity with maybe a point of risk. Then we break out up higher. Notice they hold the first roadmap level a couple times, and they come in, and then there's your next test of the 200. It goes through by 1 point, and then you should have been able to get another 10, 15, 20 points higher. And then finally, they come right to the roadmap level in the 200 here and bounce out. Now, there wasn't a super sexy divergence there, and there also wasn't a super sexy local divergence on these two tests. But again, holding 200, holding the roadmap level in the 200, and then making it out to the high of the day, which was, interestingly enough, right around that 61.37.75 level again. And we see this all the time. They come through a level a little bit, and then on the second or third test of it, they come right to it, give it a kiss, and then that leads to the pullback. So, and then they pull back, and then there's the last little aggressive opportunity, the bearish divergence off the back end of the FMA, right there. So if you wanted to, you could have got in right in the last couple of minutes of the trading day and got yourself that last little 2-point scalp to right there. So that's how yesterday turned out. Again, pretty easy day for me. Everything just worked out the way it should, and it's not going to be like that every single day, but pretty good stuff. So that brings us here to the overnight, where, what do you know, we've got a pullback right to the roadmap level with a bullish divergence, and I keep hitting that. I should be hitting this. Beautiful bullish divergence off the roadmap level last night that has led to our next bounce out. And notice on the way up, they pull back right off of the roadmap level at 37.75 and bounce out, and now they've been holding it for the last hour. And I actually watched this pull back to here this morning, and I almost was tempted to just put a small position on to see if we just kind of held, because look at all the resistance, 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 resistance. We break out to the new high. I was really thinking, because we were pulling back into it, to put a long there in a small position. I didn't do it, and you know, that's just the way the cookie crumbles sometimes. And so far, getting a scalp out of it, right? Would have gotten my 2 and my 4 pointer off, and hey, maybe it'll follow through even more never mind, have to eat those words. So that's it, my friends. Again, I think some really good teachable lessons from yesterday. And I know a bunch of you were trading with me. I know Kevin had some pretty good success there as we were fading the market and it was selling off. So let's go ahead and jump up to the higher time frames now and see if they have anything new to add to the picture.